Hello and welcome to today's recap. It is Monday night, October 26th. Fast year already, fast month. Today was an interesting day. We had FOMC this week. I think that spurred a little bit of indecision. I also think it was because of how much the market moves in these one-day spurts where we get explosions and then we get nothing. We also saw a lot of stocks coming into today where they were very close to resistance, which limited the upside, or overbought where there was more likely to have some sort of consolidation. But we actually ended up getting an extreme day of light volume. You can see a little bit of a joke here, but not really. We actually did 80 million shares less today than we did on Friday, and over 110 million shares less today than we did on Thursday. So the market was really tight today. Not the greatest day to take risk. We did have a few individual stocks that followed through, Amgen being one of them. We'll take a look at that from this morning, which was actually a call out by one of the members in the room. Nice job today on that, by the way, James. But today was a day where you could have really got in trouble by over trading on a day where volume was really light. As a matter of fact, we could take a look at a intraday move in Home Depot, I believe, where it just absolutely was in a really nice follow through on an uptrend, and it fell $1 and rallied $1 all within an hour. And that's the type of volume and price action you get on these lighter volume days. So learning how to make money is just as important to long-term success as learning how to not lose money. And today was a little bit of a tough day. So here is what we were looking at coming into today. This is actually the end of Friday. Some pretty strong follow-through on some of the larger cap stocks, and specifically Apple. It looked like it was really ready to finally get over that 116 level, start making a run at 120, and then start to get into that 125 to 133 level. And we actually kind of reversed that today. It was a little bit of news intraday. Facebook and Microsoft both followed through as well. And you could see on Friday's gap, we pushed up, got through these levels, and then basically up here in the 210, 212 area, maybe a little bit more than that, is the next target. But we had a long discussion this morning about whether or not getting long in this area, especially in the SPY, actually makes sense, because we'll take a look at the 2015 chart of the SPY, and we really haven't been able to get through this level all year. So you really have to justify, do I expect, or do I have a good enough argument that I think if I'm buying at or near where resistance level is that we haven't been able to get through all year, what are the odds of follow through to get through there to warrant accepting the risk? And I think that the reward potential on top of the FOMC this week, plus some more earnings, I think that lent itself a little bit to the amount of lack of volume that we had today. Although the amount of lack of volume we had was staggering today. It was really tough to watch some of these stocks today. So here's basically the morning call that we had coming into the day. SPY price action, now 4 consecutive weeks of buying, and I felt pretty strongly that we were due for a pause or a pullback. We basically got that today, but again, even if you get a pause or a pullback, you can get some days where there's something to do. Today was really light. There were a lot of good longs that set up, a lot of decent shorts that set up that just did not follow through like we had last week. So many of the long ideas, as I said, overbought. McDonald's, for example, which actually did get some more follow through in the morning. Retail getting hit. Macy's had a really good push lower on Friday, did not get followed through today. Costco still pushing past, I believe, is the 153 level. We'll take a look at that chart as well. Nike and UA both in a little bit of a battle over some endorsement deals, and they've started to pull back a little bit, but especially for Nike, that's not that big of a deal. They're at 52-week highs and just kept gapping higher for the last, I want to say probably for the last 2 or 3 weeks. UA has gotten a little bit hammered a little bit more than Nike. I think that's lost its mojo a little bit more. So here's the S&P at the end of today, Monday afternoon. You can see Apple actually reversed today. Facebook still holding in there pretty good with earnings on November 4th. Microsoft's got some follow through today, but overall, not really a lot of excited buying going on today, which you would have expected on a day where a lot of stuff was still in decent uptrends. But like I said, it's getting tough to, and I'm not talking about valuation-wise, it's getting tough from a reward potential area right now to justify wanting to be long in some of these stocks that have had a run. And some of them are really stretched away from the 20-period moving average on the daily chart. So I think we're going to need to see a little bit of consolidation. And obviously the FOMC week is a big deal in that as well. So you can see here we did get the consolidation, or I should say the pause that we were looking for coming into the day. It's actually an inside day, but look at this drop off in volume, just absolutely incredible. It's like 170 million, 140 million, and then I want to say around 64 million. Very, very light day. But this is a much better picture of what I'm talking about. A lot of people are talking now, okay, let's say I do want to be long up here. This SPY has not been able to get above this area. And again, whatever number you want to use, 213, 214, 212, whatever it is, hasn't been able to get above there all year. So if we're looking at bidding into this area, how much reward potential do you have compared to this making a 50% pullback in a normal movement? It just getting to the point where it doesn't make sense to take that next move. So take a look at some of the ideas we had from the long side today. See, we had actually a pretty decent list of longs today. As we just said, McDonald's was a little bit overbought. We'll take a look at that. ACN was at a nice breakout level. Into got some follow through today. Actually, intraday as well as daily follow through. Facebook as well. As far as some other stuff, Microsoft actually bounced a little bit but didn't get much intraday follow through, and some of the financials actually look like they were setting up to follow through on the long side. We'll take a look at those. They actually broke out of recent trading ranges but then just kind of melted back down into the trading range. So we'll take a look at those stocks right now. Let's see. We will take a look at Citigroup. You can see here clearly. Let me just draw a trend line here. This is what we were looking at in Citigroup, Wells Fargo. A couple of these stocks, they just kind of like breached out of the level there, and we were looking for some follow-through, maybe even up to this level up here. Just did not get it today. JP Morgan, very similar, although it did not quite peek its head through as much as Citigroup did there. Wells Fargo, again, you can see broke out of this little range here, looking for some follow-through. Absolutely did not get it, and that's kind of what made the day a little bit frustrating. Apple, there was another one setting up perfectly. Actually, let me zoom this. Actually, you can see it over here. We were in really some pretty definitive boxes here in Apple. Essentially, 116 to 120 is the level that we were looking for it to get into. Got up to 119 and change after 120, then 120 to 125, and this is really the bigger trading range for the year. So, did not expect it to pull back into 120. That was the issue here. You can clearly see 120 has been resistance. When we finally gapped above it and pushed through, we fully expected to retest the 120 here. And although there was news today about one of their suppliers, Apple's not their only one. They should have actually held that bid today, so it kind of feels like something deeper is going on there. As far as some of the other large cap stocks, I actually had Tesla coming in as a short today. And we did not actually get the selling that I expected. As a matter of fact, it ended up having a green day. You know what? Let me put this on intraday chart so you can see it. We actually ended up getting some buying. Once we got above the opening price, which is this level here, there was really nothing to do until it started to trade down here below the open. So coming into the day, you can see why I liked it short. Push down, flag, push down, flag, push down, and then flagging again, looking for it to push down, especially with the week close on Friday. Just didn't get it, so I just let Tesla go today. Netflix, very similar. Looking for it to trade lower. Netflix seems to be just hovering right around 100, which is right here. As you can see, it did for most of the morning. Finally ended up catching a bid, and this is one of the reasons that you need to have this stock in your watch list every single day. There's certain stocks that have great liquidity and good average true range, and when they're in play, they are very tradable. But let's put this in perspective. This is a great intraday trend. This is an absolute mess on the daily chart. This is not a clear bias to want to be long or short. Right now, really the only story in Netflix is whether or not it's going to stay above or below 100. This is not clean order flow. This is not clean participation by institutions. This happens to be a good day trade. So we've been talking quite a bit about being in day trading mode, and that essentially means that you're just trading the intraday price action, and more specifically around yesterday's high and low, today's opening price, and where you are from the previous close. And you can see Netflix actually finally got above the open here, previous day's high here around 101.50. Completely depends on whether you wanted to just trade it above the open. Again, over here it's a mess, which makes this a little bit more difficult. Google had some really good follow-through on the day of the earnings, but so far has not been able to push back. But today we did find some buying, again, after the open, first 15 minutes here, first 10 minutes. We actually had a nice bounce, but this pullback was the interesting thing here. Again, this is why we watched the opening price the whole day. It stayed very comfortably above the opening price, and then if you eliminated the whole downside and looked for nothing but spots to bid, you actually did have a couple of different spots you could have got in. Now, this reversal, you could have bid into the opening price expecting it to hold, but I don't know if you'd really necessarily do that without having clean confirmation. Maybe you could have dropped down to a shorter time frame to find an entry, but I think this one here, where it pushed up, flagged, and then held in the middle of the day, that would have probably have been the best case scenario there. And Amgen, as I had mentioned in the morning, somebody had called it out, and it was actually right here. Let me zoom this out a little bit. Again, we keep talking about being in day trading mode in the previous day's low and the previous day's high. Amgen actually pushed up, got above the previous day's high, flagged there for 20 minutes, and was above the opening price. This was probably the cleanest move of the day, right at that level. And something we actually want to point out, I don't know if you can see that in the lower right hand corner, Amgen basically has a $5 average true range, which means it's normal movement from low to high. And while we were in this move here, and when it expanded to the upside, we're actually looking at 154.50 to 159.50. That's $5 right there. So in that one window, it actually moved its average true range for the entire day. And the call that we essentially made was, you never want to forecast or assume a stock will stop going in one particular direction. However, there was more to the argument today. The market was slow, extremely light, and the stock already has moved what it normally moves in a day. So the person who was actually long here had asked the question, and we said that that's what it normally moves. A better volume day, maybe you could wait for a pullback and get another move, but we actually recommended that he tighten up a trailing stop in that area. And you can see it really didn't trade through there. So just a quick lesson there on using the average true range to forecast some of the moves. Some of the retail stuff that we were looking to roll over, you can clearly see here why we were looking at Macy's short. Actually loved it coming into the day, and we got a good push right out of the gate. But again, this is why it's difficult to trade on light volume days. If you don't get follow through and you get caught on the wrong side, you can get caught in this and actually get hurt pretty bad. So Macy's was a short, didn't follow through. FEYE, very similar. You can see here clearly on the daily chart, we actually got through what was support level, closed comfortably below there on Friday. Did not get followed through today. RRC was actually one of the ones that did follow through today pretty cleanly. And again, if you, I'm giving you the list here, but if you want to get this list every single morning, you can always go to tradingeducationblogs.com. It's either right here on the home page, or you can click right over here on blog. So if I happen to be running through this and you want to get your own list of all the stuff during the day, my post, Marion's post, every day you can go over there and get it. But you can see RRC was actually one of the nice ones that followed through today, and actually cleanly. Kohl's on the short side, very similar where we came into today. You could see clearly why. Really good downtrend in multiple time frames. Moving averages are clean. Friday took out new 20-day lows, fully expecting follow through today, and just didn't get it. So one of the common themes we were walking through with some traders this morning is, and I believe it was Amba, if I'm not mistaken, if you put a trade on, which was right here, which was below the most recent levels, if you put a trade on that doesn't follow through, it's nothing more than a business expense. You just have to chalk it up and say, I did what I was supposed to do. The stock didn't follow through. There's no big deal. Just go on to the next trade. Hog was another one that we really like coming into today. Had a really good push down on earnings. Good push down. Nice tradable gap down. 3 days, basically a nice clean bear flag. Looking for today to stay below the opening price and roll over. Kind of a tight trading range. Didn't do that much there. As well as Lulu, which you can see why as well. Friday, really good volume. Excellent follow through. Here's Friday's trading action. Looking for one more day of that today and just didn't get it. You can see we actually had an inside day. Couldn't get outside of the range. So tomorrow that will be in the list for, as a breakout trade tomorrow from an inside day. Looking for some follow through there as well. Some stocks on the long side. Again, a lot of them were at or near resistance levels. I guess we could focus here on the daily chart a little bit more. Here's why we were looking at BMY. 1, 2, 3, 4 times it got up to this level and got pulled back. But Friday actually got up to that level, closed above it and above most of this level. Some short-term resistance here at 66, but then we're looking at 70. Got above it early in the day here. You can see we had a nice push out of the gate, 64.50 to roughly 65.75, so just over $1 from low to high here. And this pullback would have been one that you would have been looking to bid, but then you had to deal with yesterday's resistance and today's resistance. So the better trade here in BMI would have been wait for it to take these two levels out, and you can see we never got up there. Let's see, Honeywell, very, very similar chart pattern, and you can see why we're looking at it. Again, 3 or 4 times getting up to this level. Now we have a little bit of a flag above this level with 106 as the first target, so make sure you keep that in your watch list as well. EA actually coming into the day, triple top here, looking for that to break through, and some of the other stocks, Take Two, also up at that level, but you can see EA just did not push through there. Facebook, again, really, really clean follow through once again in the stock. And actually over here was earnings. So all things considered, if this was an earnings that they disappointed, and this is what we're getting into earnings, we're looking at something really special coming up here in Facebook. It's held up extraordinarily well. So that's essentially what we had going on today. I think the big story is the FOMC this week. SPY, really, really light volume. You have to really be disciplined. Look at this price action and look at that trading range. Really not a lot to do there. The terminology we're using over and over and over again in the recap right now, excuse me, in the morning meeting, as well as when we are in the live trading room, stock specific and day trading mode unless the market follows through. The big problem that I can absolutely see that a lot of traders are having right now is if you lean heavy on the market, or if you're what we might call a momentum trader, where from one day to the next you expect the same kind of move, it's been very tough to get that one day to the next where you get 1, 2, 3, 4 days in a row in the same direction, and you can really lean into it. Let's say on day 2 and 3, and on day 4, maybe you lighten up a little bit, but you can see here we're getting indecision, 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 sell day, buy day, gap day, nothing day. We haven't been getting that nice flow of move to the upside, to the downside in the market. So be more stock specific, be in day trading mode, and being in day trading mode basically means you're not being that aggressive with adding to positions unless you happen to have a lot of stocks in the same sector doing the same thing. So I guess that's it. We're going to call it a day. Make sure the trades are having plenty of volume when you're getting involved. The best ideas by far right now are those where multiple stocks in the same sector or industry are doing the same thing. And you can get a little more conviction because the market itself isn't helping you out that much. Just remember the FOMC is out this week. Be stock specific. Keep your disciplines, especially on lighter volume days. Have a great night. We'll see you tomorrow.